Relative strength reveals leaders. Stocks that hold up or rise faster than peers during corrections or, after a bottom is put in often become future leaders once the market turns. And you can watch them for future setups, entry tactics, all of that. Holding above moving averages when the market is below them and otherwise showing strength during market weakness are all ways that you can identify the relative strength edge. The RS line is the key for identifying the relative strength edge. The relative strength line is basically plotting the price of the stock divided by the price of the SPY, and it basically gives a day-by-day measure of whether a stock is outperforming or underperforming. If it's rising, the stock is increasing relative strength. If it's declining, it's decreasing relative strength.
Relative strength is all about, it's again, the second visual edge for you in the markets. Stocks that consistently outperform the markets, be it on up days or down days, those are the ones that you want to be in. You want to be in market leaders. Market leaders show relative strength.
Just because the stock is up on a day where the market is down, you also want to consider the overall context of the chart. If it's an absolute destroyed stock that's just a mean reversion bounce off lows, that's not necessarily relative strength. But, if that shows up again and again and starts forming a trend, then it's more of a stock to take note of. This was another correction. The choppiness that we saw, root was rising in terms of relative strength. You can see during the actual price action, really tight at the bottom of this base. What happens when the market pressure lessens a little bit? This went from 85 to basically 120. It doesn't look like much of a big move here because it's a high ADR stock, but a really strong trend in here. What happened as the market pulled in again? The relative strength line was increasing as the market was pulling back. And this has, gained about 40% in the past, month or so as insurance and this name in particular has done really well. This is another example of AEM recently. Obviously, miners have been strong. The market was choppy, pulling back, relative strength line increasing. We pop above the moving averages, start this trend. Then back in the space, look at this. This is so clear. Market pulling in, relative strength line increasing. And then after, the market lessens a little bit, this breaks out and begins a nice trend from the low 90s all the way to over 110. Great. So getting into the next one, the relative strength edge. This is probably something that you guys already use maybe or is pretty common out there, but it's one of the most powerful edges that you can apply. Relative strength reveals leaders. Stocks that hold up or rise faster than peers during corrections or, after a bottom is put in often become future leaders once the market turns. And you can watch them for future setups, entry tactics, all of that. Key relative strength signals include the RS line making new highs, outperforming on 62.5%. This is a study that Rye did looking back on relative strength days. So on 62.5% of down days, if a stock outperforms, it could be a leader after the market turns. Holding above moving averages when the market is below them and otherwise showing strength during market weakness are all ways that you can identify the relative strength edge. And we've got a lot of examples to show, different ways to define relative strength. And why does this happen? The reason is because institutions, this is the driving force behind market leaders and behind relative strength. During a correction, during weakness, institutions are going to look to add shares in their highest conviction names that they're still aggressively trying to add to, and that demand supports a stock better than the rest of the market. So strong RS stocks attract capital during pullbacks, and as institutions add to high conviction positions. Exactly what I just said. And on the flip side, if you see very weak action during a correction, those are names that are being distributed by institutions as they try to hold on to their strong stuff and get rid of the stuff that they want to sell anyway. The RS line is the key for identifying the relative strength edge. The relative strength line is basically plotting the price of the stock divided by the price of the SPY. And it basically gives a day-by-day measure of whether a stock is outperforming or underperforming. If it's rising, the stock is increasing relative strength. If it's declining, it's decreasing relative strength. So the RS line, as I mentioned here, compares a stock's price relative to the market index, likely the SPY, and shows trend-based outperformance, not just momentum. And I want to be really clear here because a lot of people get confused by this. The relative strength line is different than the RS rating. The value of the relative strength line, because it's just a ratio, it's just the stock's price on any given day divided by the price of the SPY. That is just a ratio. The value itself of that ratio does not matter. It's the trend of the line that matters. The RS rating compares the relative strength over a period to all other stocks in the market and then creates a measure and percentile score for that stock. We have both in DFU and both are very useful and both are measures of relative strength, but they're not related. The RS rating is not going to be the value of the RS line. They're different metrics. So I just want to make that clear. And here are a few really good scans that we have presets in deep view to help find relative strength. And each of them kind of look for different things here. So first things first, we've got one I called relative strength phase. A relative strength phase is when a stock is trending above, the relative strength line of a stock is trending above its signal line, the 21 EMA. And basically this screen right here is looking for a stock that is liquid, over $10 in price, rising above its 21 EMA, above its 200-day moving average. It's a common stock or ADR, and it's in that RS phase. So it's trending above its relative strength line. Then here we've got an Oliver Kell preset, one of the key screens that he looks for and uses during down days. And this is when the market, is down 1%, 2%, 3%, very similar to the Action Friday. And these days are actually great for identifying relative strength because they kind of show you what's obvious, what stocks are being supported, what groups are being supported on a day where everything is getting taken to the cleaners. And one thing I really want to make clear about relative strength is it's not enough to show relative strength on one day or at the beginning of a correction. What's really important is to see sustained, persistent, consistent relative strength day after day, especially after the market seems to have put in a bottom. The stocks that show relative strength over the course of the correction consistently are the names you want to focus on, not a stock that showed one day of relative strength and gapped up early in a correction and then got taken to the cleaners. That's just relative strength on one day. We're looking for consistent relative strength over the course of the whole correction to show that consistent accumulation by institutions, that support by institutions. So this screen right here, basically looking to see, is a stock up on a day when the market is down, is how you can determine if a stock on that day showed relative strength. And then you want to keep track of what Ryan, we call a relative strength list, and say on March 29th, these stocks showed relative strength, have a list here. Then the next day, you have another relative strength list, especially if it's a down day. And then you look for the common stocks that show up again and again on those relative strength lists for each day. And that's how you find the next potential leaders. So hopefully that was helpful to you guys. And I think that's a key thing we want to get across here. Then on this last scan here is another one that looks for relative strength on a particular day. But instead of just seeing if a stock is up on the day, it's using daily closing range. And we talked about that in the previous webinar. Over 50% suggests accumulation. This actually looks for over 75% on a day that's very negative. So if the SPY has a closing range of 3%, a stock that has a daily closing range of 75% is definitely something that you want to review and potentially add to that relative strength list to basically take note of. Right, anything you want to add about looking for relative strength over a consistent basis or any of these screens in particular?
So the gist of it is stocks that outperform the markets are showing greater relative strength. Or when a stock outperforms, let's say the NASDAQ is up 1% and the stock is up 3.5%. That could be a mechanism of its beta, right? And how it trades in the market, but it's also outperforming the market. It's stronger than the market itself. That's one form of relative strength. The second is the biggest one, and a lot of questions in the chat, is RS only when the market's in corrections? I'd say no. So if the NASDAQ is down 3%, right, and that same stock is only down, let's say 0.5%, that's relative strength, right? It's down on the day, but it's down much less than the markets, or much less than what we would expect, let's say a stock with a beta of 2, right? The second question that I saw in the chat is, what is beta? Beta is a stock's performance relative to an index. And you could define that index depending on where you are in the world. As in the United States, we define beta versus the S&P 500. That's the benchmark, right? And if you're outperforming the S&P 500, your beta is above 1. If you're not out, you don't tend to trade more than the S&P's performance, your beta is less than 1. So relative strength is all about, it's again, the second visual edge for you in the markets. Stocks that consistently outperform the markets, be it on up days or down days, those are the ones that you want to be in. You want to be in market leaders. Market leaders show relative strength. That's it. That happens every single market cycle, and that's a guarantee because there's no way you can hide on the charts to, let's say, be down 50% the next day. That doesn't happen. They always show relative strength consistently Um, and we have a stat somewhere that in a correction, if a stock is outperforming the markets 62 or 60, let's just 60% of the time, the the chances of it being a market leader on that next uptrend are very, very, very high. And you'll see that in every single market leader. If you go through our model books that we make every year, that statistic will stand true. And that statistic was created based on our model books and the studies that I've done as well. So it's very important if you want to be in stocks that have the potential, right? Some show relative strength, but then fail when the market turns. There's no absolutes when it comes to that, but many stocks, or if any stock is up 100%, it's shown relative strength, right? And that it will show on the charts for you. So that's why it's important.
Yeah, and what I want to add here is these are just three examples of screens that you can run in Deep View to help find relative strength. But there are many different ways to find relative strength. Somebody, I think Alberto said Ross Haber's RS New Highs screen is great. That's a great one to use as well. And actually, how I look for relative strength changes depending on kind of what the market is doing. If the market just broke below the 21 EMA and is very negative, I might run a screen that looks for stocks above their 21 EMAs because it's holding above a moving average that the market is doesn't. If the market has looked to put in a sustainable bottom and we're 5 days away from that bottom, where we rally for 5 days, I might run a screen or sort my columns of my other screens by 5 day percent change to see what stocks bounce the fastest off that local bottom. And that's actually a golden nugget I learned from Yves Bobach. If the market has bottomed a month ago, run a screen and see what stocks have performed the best over the past month. And likely, they're still going to outperform because they've been accumulated the fastest off the market bottom as the risk appetite, improved. Just wait for that next setup. They might not be set up actionably that day or the next week, but wait for a moving average pullback, wait for the next base breakout. So I think my point is there's many ways to scan and look for relative strength. Find the way that makes a lot of sense for you, and you can definitely use these screens as kind of base filters. And we've got other presets in DeepView that help identify that relative strength. And actually, here's a good example. This obviously last week ended on a very negative note. Everything was down, 2, 3, 4, 5%. Here, I just have the DeepView leader screen, another preset that kind of is a great general screen. I review it every single day. And I've simply sorted this screen by percent change today and look for what stocks were up on a day that the market was down 2, 3%. And these are showing relative strength. I've also got the daily closing range here as a column, and I'll sort by that as well to see what stocks had 100% closing range, 75% closing ranges. I'll also, sort by percent change from the open, what stocks showed strength off the open if there was a gap down. That's a way that I like to look for relative strength. Also, one last column here, I've got price percent change for the 50-day. We're below the 50-day right now, clearly on the indexes. What stocks are holding above their 50 days. So depending on where we are in this particular situation, like if there's a gap down, I'll look more at percent change from the open. I'll use these different data points that we have in DeepView to look for relative strength and build that relative strength list. And I've also got the industry column here, so I can see not only what stocks are performing well, but what are the commonalities among the stocks showing relative strength. And this is how you identify leading themes. And what showed up on Friday? Metals and mining, biotechnology, utilities, oil and gas, metals and mining, biotech, capital markets, biotech. This is how you spot the leading themes before everybody else, is you're looking to see what stocks are outperforming and what themes are they a part of. And this is a really clear way to do it in DeepView. So definitely recommend kind of adding this to your toolkit. And it's super easy to add these data points. You can just click this gear icon and search for whatever data point you'd like. Right, anything that you want to add with using columns or how you look for relative strength on a day-to-day basis?
Yeah, there's a great question. There's two forms of relative strength. One is when you weight the calculation for recent performance, right? And one is when you just look at pure performance on a time frame. So we have both capabilities in DeepView, which we call the absolute strength rating and the relative strength rating. So absolute strength is just purely looking at, from January 1 to today, what are some of the best stocks in the market, rank them versus themselves, and then give me a rating of 1 to 99. So that's a pure performance and momentum based rating, whereas relative strength does the weighting of 1 month and the 3 month span, merges them together, etc. So I like to look at the absolute strength a little bit more, especially on a 1 month horizon and the 3 month, because I don't want those numbers to be blended. I just want to know what's outperforming the markets in those two time frames. Um, Another thing is, in the first webinar we covered that, when NVIDIA was pulling back, its closing ranges were really nice
On a
as
weekly
it pulled
basis.
back during a
Yeah,
correction. So adding the WCR column during corrections is a powerful way for you to compare, hey, the market closed at the lows of the week. What didn't close at the lows of the week, right? That's a form of relative strength, and how bases build up potential demand, and how bases form out into a cup or a flat base, etc., is that those weekly closing ranges are always better than the market closing ranges. And that potential builds out over a span of weeks. And what we call a setup is forming. A setup, a base is forming for you to then eventually find an entry tactic for. So I think in corrections, using the weekly closing range column is important. Another one that I use is the number of relative strength days as a percentage. So I want to know how often the stock is outperforming the markets during a correction, right? So if it's outperforming the markets 60% of the time, I'm very interested. So there's a particular scan we have in DeepView just for that. If you search our presets for 62.5%. I think that is an important metric. It gives me a lot of conviction that I'm looking at the right names with the highest potential when we're coming out of a correction, as well. So those are some of the ones. A very subtle one in deep view in former relative strength, when you're running your screens while the market's pulling back, the industry group that's highlighted, be it biotech or whatever it is on the day. Let's say you're running the deep view leader screen or the up on volume, that is giving you signs that this is the most popular industry group that is consistently outperforming the markets. So in the back of your head, those blue highlights kind of build up and give you, hey, I should be looking at biotechs, or I should be looking at oil and gas. I should be looking at oil and gas, right? So if you did that over the past 2 weeks, you would see oil and gas a lot more. You'll see gold miners a lot more. You'll see China names a lot more, and those will highlight blue in the industry column. So that's how I use deep view to kind of look for relative strength. There are many different ways. Again, what Richard said is right on, right on. Define a way. It could be as simple as looking at 52-week highs in a correction, right? Every stock that is going to go up is going to make a 52-week high at some point. So that's a very generalized screen that you can look at. You don't need to highly specialize or look at some of these stats we're speaking about, but at the very minimum, have a way for you to spot relative strength.
yeah. And the last thing I want to say here is, just because the stock is up on a day where the market is down, you also want to consider the overall context of the chart. If it's an absolute destroyed stock that's just a mean reversion bounce off lows, that's not necessarily relative strength. But if that shows up again and again and starts forming a trend, then it's more of a stock to take note of. And also, I just want to highlight here, you might see for daily closing range, we actually have a nice visual here, which is awesome, that actually allows you to see the closing range without even bringing up the chart. So here's PGR. It had about an 83% closing range. You can see it's almost a full candle here, and it was up 5% on the day. So even without looking at the chart, I can tell it was showing relative strength on that day. What theme is it in? Insurance. Just like Bryce said, keep track of what groups are highlighted in blue or just showing up again and again here. This one, ONC, it was up 10.5%, but look at its closing range, 22%. So it may or may not be showing relative strength of the day. So I like to combine the price percent change with the closing range, especially using these visuals, which are also for weekly closing range. And that helps you identify a closing relative strength that much easier. All right, so let's get into the examples here. So you made it to the examples. This is the relative strength line here. When it's highlighted with an area in blue, it means it's above the signal line, the 21 EMA. This is the chart of the SPY, a line chart during the same period. And then this is the stock chart with price and volume action. And what we want to point out here is what we call an RS phase, or when the stock is outperforming the markets, and we want to watch it for that next setup, that next opportunity. This is Reddit. It IPO'd back here, formed a consolidation, moved higher, broke below the moving averages. And then this period, this range is super important here and is really critical. And the reason being is during this period, the market was pulling back hard. The relative strength line was increasing because Reddit wasn't pulling back as much as the market. And what happened after the market pressure lessened and we bottomed here? This went on a monster move. And I got involved early in this area because of this relative strength here. And it's really easy. You can just plot an RS line here, SPY up here, and then look for divergences where the RS line is increasing as the market is pulling back. And that is what an RS phase is. And Rye, jump in if you have any thing to add here. But here's Root recently. This was another correction. The choppiness that we saw, Root was rising in terms of relative strength. You can see during the actual price action, really tight at the bottom of this base. What happens when the market pressure lessens a little bit? This went from 85 to basically 120. It doesn't look like much of a big move here because there's a high ADR stock, but a really strong trend in here. What happened as the market pulled in again? I actually don't have this marked, but it's another good example. The relative strength line was increasing as the market was pulling back. And this is, gained about 40% in the past, month or so as insurance and this name in particular has done really well. Another example that I also didn't have marked here is here the market's pulling back. During this, 3-day period, the market really pulled in hard. Root actually increased with a gap up and held firm. And this let you know, this got it on your radar. Again, edges get stocks on your radar that then you could swing trade from this tight area and profit from this trade. But this relative strength edge right here shows up clearly just during this 2-day period. So it can happen really fast. And one thing I want to point out here is, this is a little bit complicated watching for divergences and all this, and it might be a little bit difficult for newer traders. We made a RS phases indicator, which highlights in blue when this characteristic is happening, when the market is pulling in and the relative strength line is increasing. So this is when we're in RS phase. This is when we're in RS phase. During the short 2-day period, this is when we're in RS phase. So this indicator can be a nice way to visually indicate when we're seeing this divergence, especially if you're a newer. Another example, BABA. We've all heard about BABA recently, but it was showing relative strength way back in here, way back in this area. As the market was pulling in, the relative strength was in a clear uptrend, and this is when it really started its really strong phase. And this is getting involved a little bit later. It actually did show relative strength during this area as the RS line continued higher as the market pulled in, but we'll see how this base develops. And just to show this isn't hindsight, this is what I was watching when I put it on the TradeLab report right in this area. So this is back in this flag. This is what I saw and what I was looking for, and why I considered adding this to my focus list is because it's showing relative strength when the overall market is pulling in, and it had just started a nice uptrend and was forming a really nice tight area, tight area on low volume. That's kind of my bread and butter, and we gap up and have a nice strong trend before this base. So this isn't something we're talking about in hindsight. This is something we actively look for, every single day in the market, especially when the market is choppy and corrective. This is a great edge to use to try to identify swing trades and position trades when the market pressure lessens. Rye, anything you want to add on relative strength? This is another example of AEM recently. Obviously, miners have been strong. The market was choppy, pulling back. Relative strength line increasing. We pop above the moving averages, start this trend. Then back in the space, look at this. This is so clear. Market pulling in, relative strength line increasing, and then after the market lessens a little bit, this breaks out and begins a nice trend from the low 90s all the way to over 110. So this is a really powerful edge that is definitely worth considering. Ryan, anything to add on how you look for this on charts and use the relative strength line maybe?
Yeah, I would say, there's no way a stock can hide and outperform the markets without showing relative strength. And that's, you know, that's it. There's nothing technically it could do that is sneaky or delusional or trying to mask itself somehow. It can't. It doesn't happen. This edge has, ever since the beginning of time, especially with charts and everything getting more digital, it's there. You visualize it, you see it, you track it, you look at the setup, and then when the risk is there, you enter that right above the pivot or right, as it goes up the right side. So every correction, there are a list of stocks and a list of themes that come about that have shown relative strength that then trend. Oil and gas just didn't start an uptrend overnight. It was a 3-week process when everything in the markets was pulling back. Oil and gas, miners, China, all of these that are trending this year were showing relative strength, right? So when you were screening, when you're the first acronym of the SNIPE framework, when you're doing that and you're looking for relative strength, you'll start to identify it a lot faster. You'll identify to the next one that we'll cover, which is themes, a lot faster. When you see a theme in China, all these, China names will go up at once. You want to be in the best one. The best one will have the highest relative strength and maybe the best volume signature as well, right? When you combine those two, that one will outperform every other China name that is in that particular group. And you want to be part of that because then you have two edges at play. You'll have higher conviction, you'll have a higher position size. When you combine that, you will outperform your portfolio, will outperform the markets just naturally. So,
Yeah, and I see some questions, why with BABA are we using SPY versus KWEB? It's because we're trying to identify what's stronger than most stocks in the market, and the SPY is a good reference point. We're trying to identify relative strength, and using a relative strength line of BABA versus KWEB can show whether it's outperforming KWEB, but it's not helping us identify where the strength in the market is. We're trying to set a baseline, which is SPY, and then look what's outperforming SPY in that moment. That's why we're using it as kind of the comparison for all these stocks.
plotting the relative strength line of BABA versus KWEB will tell you that BABA is the top name within KWEB, then nothing else, right? And plotting it versus the market will tell you that when the market pressure was on and the stock was supposed to go down, it didn't go down, right? And when the market pressure suddenly lifts, or we have an oversold rally, or we consolidate sideways for a few days, it will use those opportunities to then rally up the right side, right? So those are two different pieces of information, both key, but the one versus the market tells you that it's about to outperform the markets, right? It's one of the top stocks in the markets for a reason.